Hello and welcome to another financial analysis video. Today I am talking about PepsiCo and their third quarter earnings, and we'll go right to our earnings screen. Pepsi reported earnings of $1.35 per share, which beat analyst expectations of $1.26 per share. Now, what's interesting about Pepsi, and as you can see by this chart, they've been pretty consistent over the past few years. They have met or beat earnings in every single quarter I've covered on them thus far, going back to 2011. So they are consistent when it comes to earnings. And one of the things that makes that nice is I can look at their forward earnings going out and feel comfortable that that's where the company is going to be. Now, Pepsi trades at a little higher multiple than the rest of the market. Not much, but a little bit higher. That's something of importance to note when you're looking at forward earnings and evaluating based on that. But I want to dig a little bit deeper into Pepsi's actual numbers and how things look. Now, the first thing that may catch the eye of an investor here would be the increased leverage. So Pepsi's leverage has gone up. Their equity has gone down, and that's mostly what's contributed to this increased leverage. The reason this has occurred is because Pepsi has bought back stock. So if you look at the balance sheet, there's a line item for share repurchases, and you'll see that that line item has grown year over year by almost the same amount that Pepsi's equity has gone down. So essentially what the company is doing is they're taking almost all of their earnings and buying it back in stock. And so that's what's contributing to the higher leverage. It's something to look out for. It's something to watch. But once the share repurchasing is done with the way the company is earning, this leverage should start to soften up. I want to also note the return on equity. And while this looks really, really good, this is where you want to be careful of traps in terms of investment information. The return on equity is good. However, it's partially reflective of less equity in the company. So the company is earning the same. They're buying back shares. As a result, their equity is going down, so their return on equity is going up. It isn't as if the company is earning more money. It's just that they have less equity. So one of the things I tend to do, and this isn't 100% out of the way, but this is where I turn to return on assets to see what the company is earning for the assets that it has. And really, it hasn't changed much, but it is up slightly. It was under 9, now over 10%. So Pepsi, from an operating standpoint, in my opinion, is operating slightly better. It's slowly improving over time. And of course, I'm going to head over to our income piece. This is why I use trailing 12-month income sometimes. Nobody can make sense of this information. It is so seasonal. So let's go to trailing 12-month. This is much better. Revenue is down on a trailing 12-month basis. The company is selling a little softer. However, with that being said, cash flow has maintained its $10 billion plus level on a trailing 12-month basis. And as a result, nothing major on the capital side, no major changes. Free cash flow remains pretty stable for the organization. And this is what they're tapping into to buy back shares. They're also tapping into this to pay out the dividend. So they have $7.8 billion in free cash flow. The dividend is running them about $4 billion a year. You know, I'm very, very comfortable with their ability to pay out the dividend. Of course, their yield is a little bit lower, the dividend yield, right around 3%. So, you know, what do I think about this, and how do I feel about Pepsi stock? I'll be honest, I think Pepsi is really a solid hold. They would be a company I'd look at again if we went back into that big dip correction, because it would be easy to pick up some price appreciation there. But really, Pepsi, for the most part, is a very stable company that tends to just kind of move with earnings. Look at the earnings yield here. It's 5%, has been 5% pretty much the whole time. Again, on PE, that's where you see a flat PE line. These are inverse relationships, by the way, between PE and earnings yield. So the stock essentially, the company earns 5% of its market value, and frankly, that's kind of where the movement is here. So for an investor, I think if you pick this stock up, you're going to earn the dividend and you're going to earn earnings on it in the long term. So, I mean, it's a pretty safe bet. It's something that I'm looking to take a little more risk on right now, so I'm going to pass. But I hope you enjoyed this video and have a great day.